What's good, y'all? So this is how you could have caught over 90 points trading the NASDAQ futures today. So let's get right into the charts. So first thing you'll notice on our daily chart is that on Friday, we did have a huge sell-off, about 480 points on the micro NASDAQs, which is a big day. If you recall, on Thursday, we traded into this daily BISI, buy side imbalance, sell side inefficiency, fair value gap, right? And I was potentially watching for the market to rally higher on Friday, but we ended up dumping and inverting this daily fair value gap completely, right? So what I really want to note here and point out is what side of the marketplace is the what side of the order flow is being respected by price. So you can see that these two relative equal highs were taken out once we traded above this price over the last couple of weeks. I believe 2 Fridays ago, for February 14th, we swept these relative equal highs and formed this inversion fair value gap here. This BISI, this daily BISI here. Now, once we swept above that high, we still had this remaining portion of this daily SIBI still unfilled here, right? So from here up until here, this was a daily SIBI, right? A daily bearish fair value gap, which was still needing to be rebalanced, right? So price, essentially this left, as we traded above these highs, we traded into a daily fair value gap, right? Which is the remaining portion of this fair value gap from this 800 point sell-off back in December. And you can see last week we respected, I noted that although we were trading inside of this fair value gap, we were respecting it completely. We never closed outside of it. And then on Friday, we came higher, retested it, and then sold off completely on Friday and completely inverted this daily fair value gap. Along with that, we also had a change in state of delivery here, right? So this essentially validates now that order flow is now changing from bullish to bearish, right? So now order flow is now officially bullish at the end of last week. I'm sorry, order flow is now officially bearish at the end of last week going into this week, right? This change in state of delivery was super key. Getting a close below this series of up close candles validates now that order flow is switching, right, along with this inversion. This is the model that I've been constantly talking about on this channel, right? Looking for this model on every single time frame. We're now just so happening to see it on the higher time frame. So now, what do we want to target once we get this? If we know now we have bearish order flow, now we're looking to target sell side liquidity, right? So now we have sell side liquidity resting here, right? That's some liquidity. We have liquidity resting here. This is actually all low resistance liquidity, meaning this could all get taken out at once. Once you see this can now all get taken out at once. So I'm not saying that's going to happen in the next, couple of days or heck, even in the next couple of weeks, right? But this can all get taken out relatively quickly because this is low resistance liquidity. So we have all this sell side liquidity resting below us, and we had this change in state of delivery. So now going into today, you could be watching for the market to trade back into this change in state of delivery or this series of up close candles, which is essentially a bearish order block, and trade now lower into all this sell side liquidity that was resting below us. So, excuse me, I'm throat's a little sore today. But you could see that the market was essentially, like I said, we had that sell off on, so that's not right. So if we look on our hourly chart, you can see here's that change in state of delivery, right? That I mentioned, the up close, those series, the bottom of the open price of those series of up close candles on the daily chart, we have it here. And you can see we had our London high, which was here, right? That was buy side liquidity. And then we also had our London lows here, right? So, and then we had previous day low here, which was all our sell side liquidity resting below us. Also, this huge sell-off on Friday created a few fair value gaps, right? We had this bearish one, and these two bearish fair value gaps. So going into today, I was watching the consequent encroachment of this fair value gap, right? You can see we traded into the consequent encroachment of it, into the midpoint of this bearish fair value gap here, which is what this dotted line is. All right, that's the midpoint of this bearish fair value gap. We traded into it during the London session and traded lower. So now we're essentially trading at the midpoint of this wick, right? This wick here, we're trading now at the midpoint of it. So I don't necessarily need to see the market to go higher to take this buy side liquidity, because remember, my bias is bearish. I don't need to see the market go higher to take this buy side before we take this sell side at this point, right? Because we've already traded into the midpoint of this fair value gap. Yes, we could go take it, but we don't necessarily need to, right? Because we could also get an SMT where NES goes and takes the highs while NQ doesn't, and then this trades lower. So again, now essentially what you want to see is just a model within a model, right? There's no news today, so essentially you don't need to be particularly cognizant of entering at a certain time, but you know, you want to see that same model, a BISI that gets inverted with a change of state of delivery, a retest of that change of state of delivery, and a sell-off into our sell side liquidity pools, right? So if we go to the 15, this is kind of what we looked like. So you can see here, we were trading higher. We'd already swept this buy side from overnight. And now we were coming back to rebalance up here, back to equilibrium of this range. So now if we drop to our 1 minute time frame, we can kind of see what the market looked like going into 9:30. So here we had sell side liquidity that was resting here, right? You wanted to note that. And then we had sell side liquidity here, which was our London session lows. And of course we had our previous day low that I outlined earlier as well. So now essentially I'm just watching for a model, right? I want to see some sort of sweep of liquidity, a bullish fair value gap getting inverted, and then a return into that and a sell off. So you can see here, we do trade into that opening price, right? That's that opening price of the, that daily fair value gap. You can see that's pretty algorithmic, how we trade into it right at 9 a.m., right? That's coded. The market is coded to return back to that opening price, right? And so we return back to that opening price of those series of up close candles on the daily. And now we're trading lower, right? But again, still not necessarily seeing anything quite yet. We do have this change in state of delivery right here, but I want to wait until the market opens before I take any sort of entry, until the equities market open. So I'm not necessarily looking for a trade here. We do end up trading lower, right? And then you can see that the market does come lower here, takes out this sell side liquidity. So this could have been a good entry here, right? Before the market opened. We had this change of state of delivery here, return into it, and then a sell off lower. Could have taken that in the pre-market. But again, I was waiting to see what's the market. Personally, I'm waiting to see what's the market going to do when it opens. So you can see at 9:30, market opens here. We run up and form this first presented fair value gap, right? This bullish fair value gap at 9:31. Right, and we return back into this opening price right at the market open. Is that a coincidence? No. The market trades right into the opening price of those series of up close candles that I outlined on the daily chart. Right. Yes, we miss it by a tick, but if you look at the minis contract, this is the micros. If you look at the minis, we did actually hit it. So market trades there, and so now if I'm bearish, I want to see now this fair value gap get inverted, and I need to see a change of state of delivery, which would be a close below these series of up close candles, right? So you can see now the market does come lower, and we validate now here that change of state of delivery here with the close below here, and then an inversion here. So now I can take an entry here with my stop loss above here, right? Because at this point, maybe to be safe, you can put it above, even this high, targeting now this internal liquidity here, or you can target previous day's low. You could take a partial here, maybe move to break even, or target previous day's low here, for about $930, risking about 300. So obviously a great 3-to-1 risk to reward. And entering that trade, you can see the market does retest this change in state of delivery, this series of up close candles, that order block. And then now it's just a matter of being patient and holding to our target, which we ultimately do tag that first London low here, right? So at this point, you should be at a minimum break even, right? You should not let this trade go red now that we've tagged this sell side. And then from here, the market really trades back higher. And if you look on the 5-minute, we actually traded into a 5-minute BISI here, or SIBI here, I'm sorry. So there is no reason to panic once we tagged this London low, because we did trade into this 5-minute SIBI. So that's why you need to be watching all time frames, because that is what is called the price continuum theory, right? You should be watching the 5-minute, the 4-minute, the 3-minute, the 2-minute, the 1-minute time frames, and just seeing what does order flow look like on each of these time frames, right? Don't just be watching the 1-minute. And then ultimately we do trade into our draw here before 10 a.m. Once that 9:50 a.m. macro starts, that pulls us here into previous day's low for about $930. If you took 5 contracts on the NASDAQ, or 93 points in general on the NASDAQ, which is a huge, huge day. And this honestly just sells off completely, right? In this 10 o'clock macro, we do sell into that daily liquidity pool here, right? So that ends up being from 500 all the way here at 745. So, that ends up being 245 points, which is, a huge, huge day if you're trading, these NASDAQ contracts. And then we continue to sell off for the rest of the day. And so one thing I want to point out, just looking at this daily time frame again, is remembering what our draw is. So now that we have all this sell side liquidity here, I do expect the market to trade lower and into this liquidity here, right? We also have this relative equal low here, right? So that makes this a very high probability draw, the fact that these two lows are still pretty equal. And then we do have this BISI here that the market could reverse off of. So I'm not saying we're going to get all this in the next 2 days or 3 days or even this week, right? We could trade back into this change in state of delivery, right? Into this inversion, into this SIBI. I would like to see this stay open as a breakaway gap, but we could trade back into this order block and then go lower, right? And now we could kind of, look for bearish sell opportunities over these next, few days or next couple weeks. As long as these lows haven't been taken out, I'm going to be bearish unless other new information is presented. So anyways, that's all I got for y'all in this one. I will see y'all in the next one.